So this week, I'm just going to provide kind of a brief update on a company we've looked at on the past, on the show in the past. We've interviewed management as well. Kraken Robotics, symbol PNG on the TSX venture, trades around 218, 214, $572 million market cap, doesn't pay a dividend. What do? They're a marine technology company providing best in class, ultra high resolution software centric sonar and sensors, power systems, and underwater robotic systems for military and offshore applications. The company is based in St. John's, Newfoundland, and has operations throughout North America, Western Europe, and Latin America. So the shares are actually down year to date around 21%, roughly, more following the risk off trade near term in the Canadian market. But having said that, over the past year, they're up nearly 100%, more indicative of the growth in the business over the past 7 years. And let's take a quick look at the company's most recently released numbers. These are the Q3 fiscal year 2024 numbers. If we see here year to date, I'm going to focus on first. So for the first 9 months of 2024, revenues year to date increased 52% to 63.2 million. Adjusted EBITDA year to date up 64% to 13.7 million. And if we look at net income here, up 117% to 6.4 million from net income of around 3 million in the comparable 9-month period. But the Q3 numbers were softer. Revenues declined 4% in the third quarter to 19.5 million. That the decline year over year in the third quarter occurred as a significant increase in sea power and subsea batteries and service revenue did not offset lower catfish and remote mine disposal system revenue. Adjusted EBITDA declined 6% to 4.1 million from 4.4 million due to slightly lower revenue in that quarter. Adjusted EBITDA margin in the quarter stood at 21.2%. Down slightly from 21.7% in the comparable period of the prior quarter. And net income declined 29% to 1.6 million compared to net income of 2.3 million due to higher financing costs related to the credit facility entered in April 2024. This, alongside current market dynamics, has helped push Kraken lower in the near term. Let's just briefly look at this new project that the company came out with here. Essentially, they received a record battery order this week. It's the material power contract that they received and new manufacturing facility that was announced. They received a record battery order this week and clarified details around its new Halifax-based battery manufacturing facility. 34 million in total orders, broken down as around 31 million from one customer and 3 million from two smaller customers. Smaller portions of the orders will be delivered in 2025, with the majority in 2026. The Halifax facility is expected to cost around 10 million. Will be operational by Q4 2025, and the estimate is for it to be able to produce up to 200 million in annual revenue at full capacity. So significant for the company for sure. There's a new class of batteries that has been developed to address small and mid-size unmanned underwater vehicles, or UUVs, like the Remus 100, 300, and 600 platforms, Teledyne, Gavia, L3, the L3 LVR4, and the ST Mercury, etc. A number of these. Now, while PNG batteries have always been more efficient from an energy density perspective than incumbent batteries, its cost profile was higher given the pressure tolerant capabilities. PNG has found a way to optimize this such that it can compete and hopefully meaningfully expand its TAM, or total addressable market. So that is the update on its material power contract and the new manufacturing facility just announced. Let's take a quick look, like I said, at the valuations of the company today. If we look at 2025 estimates of adjusted EPS, it trades at around 21.4 times. 2026 adjusted PE is around 12.58. Now, I do see that as a very optimistic estimate that is out there right now. If they can hit that, the company is trading at undervalued valuations currently. Let's look at a conclusion here. Again, this is very basic. The company is a good company with valuations in the near term, however, trading around 21 times this year's expected earnings are fair. If they hit that, what we said was an aggressive earnings target for 2026, then it offers some value. Near term, we monitor for guidance and better potential entry point in the stock as we see volatility in the markets, generally speaking. And the near term, they're doing that build out of the new facility. Okay, that ends your stock, our take on releasing the Kraken.
I
Any
would be
comments?
somewhat concerned here when you have a small microcap growth stock that has been producing such amazing quarterly revenue growth for several quarters consecutively, and then hitting a point where now you actually see revenues pull back, right? So that to me would be a pretty big concern in terms of just where that trend is heading.
Yeah, I mean it's an interesting business. The long term revenue growth here is quite strong. You look back to say 2020, 12.3 million, then it went to 25.6, 40.9 by 2022, 69.6. Trailing 12 months now is about 91.2. So the trajectory and the projection for growth continues with the company, but there is that the recent pullback and the market's a little concerned in the near term, but it does look like with that battery facility coming online, there is some potential for longer term growth. It is a company that we would look at potentially if we saw a significant pullback. I mean, there has been a share increase over that period as well, which we monitor closely. If you go back to 2019, there's about 147 million shares out now. There's 218, so there has been consistent share increases over time to fund some of the growth in the business. But it is a company. Certainly, there's a hell of a lot worse companies out there in the market, and this
Well,
does have
it's an
some growth.
interesting company, interesting
Yeah,
technology,
yes,
certainly.
it certainly is, and they're servicing the defense market where we believe we're going to see some further spending increases. So it is interesting play in that area. So we are monitoring it closely. It may be a company that we can look back at pullbacks and look at on pullbacks to take advantage of.